Hey everyone, welcome back to another boss candle training. What we're going to do today is we're going to review a trade that happened so that we can talk about what we look at, why we like the trade, why we took the trade, and how the trade played out. So I'm going to ask you guys some questions, so feel free to be interactive during the session and throw out some answers and ask questions. So this is a trade that happened during one of our live trading sessions. Now, we didn't actually take this trade except for if people were on a demo account and they were just looking to practice entering and exiting trades because it's a US bank holiday today. So we weren't looking to take any trades because we thought the volume in the market was going to be very flat. But at market open, so these are the market open candles here, there was a little push up, nothing like compared to the normal volume of market open, it was pretty slow. But then there was some big candles. It sold off really quickly with like a 58-point candle and then a 27-point candle. So there's a big sell-off. And once that sell-off happened, I started to see what we call what formation were we seeing forming on the bottom once this sold off here?
W pattern.
A W pattern, okay? So I'll draw what I'm talking about for the W for people that aren't familiar with what we're talking about, but that we can see that price came down and set a low, price pushed back up and set a high, price pushed back down and set a low, but not as low as the first low. So it didn't break the first low on the candles or on the TDI. Okay, so it respected the previous low and then price pushed back up. Okay, so this is what we refer to as a W. Now, this W was valid both on the TDI and on the candles, but what sometimes happens? What do we sometimes see that's still okay?
Sometimes the second leg does go lower than the first, but the TDI says different. So you go by the TDI.
Perfect. Yeah. So sometimes you'll see that the second leg of the W on the candles does push down lower than the first leg. And you think, oh crap, it broke the W. But if you consult with the TDI and you can see that the W on the TDI is still higher, then it's still a valid W. Sometimes to see the W clear on the TDI, it helps if you stretch up the percentages on the TDI to make them sort of, I don't know, further apart from each other. And then it's easier to see the W. Okay, so this here is the W down there. So sometimes that can help if you stretch it out like that. And on the candles, another option to see the W is to switch your chart from a candle graph to a line chart. And then it also becomes easier to see the W. So those are a couple different options to try to help newer people actually identify the W. So once we found the W, what was the other thing about the W that was exciting, I guess, to me?
Candles was bouncing off the EMAs.
Yes, perfect. Okay, so this W was sort of bottoming out or bouncing off or resisting off the 200 and even the 800 EMA just because they're so close together. But even if the 800 EMA was like much lower, I still would have been excited about the position of the W relative to the 200 EMA or the gray EMA. How many candles are in the gray EMA?
200.
200 candles. So it's the average of the last 200 candles. So it's a pretty strong line of resistance. And so when price makes a W off of it, it can be a good position. So once we had the first leg of the W, I wasn't interested in taking a trade. And then I seen this forming the first leg of the W, and I seen that it was going to be off of the 200 EMA. What was the other thing that made me more interested in taking a trade than I was like 3 minutes before that happened? Anyone remember? So it was simply because of the volume of the sell-off here. Very often when there's a large sell-off like that, the market will bounce back up and replace like a good chunk of that sell-off very quickly. And so I sort of just because it sold off so quickly, I was expecting a little bit of a retracement. I wasn't actually expecting it to break these highs necessarily. Sort of what it did here with this first candle was what I was around where I was thinking that it might kind of like retrace maybe about 50% of what it dropped down. And as we can see, it actually retraced a little bit more than that. But I was sort of more thinking like somewhere around TP2, TP3 here, that it might pull back up. And so it ended up doing a little bit more than that, but that's another factor that made me interested in it, is just the volume of how quickly price started to push down. Okay, so once we had our W off the 200 EMA, what's the next thing that we're looking for our actual like entry?
We're looking for some kind of form of entry. In this case here, we got a bullish engulfing candle.
Perfect. So right here, the 738 candle ended up being a bullish engulfing boss candle. So this candle here is bigger than and swallowed the candle to the left of it, making it what we call a boss candle. And the type of boss candle is a bullish engulfing boss candle. And so this is the candle that made us ready to enter the trade. So once we have identified what candle is our boss candle, what's the next thing we need to do? Perfect. Draw the fib. Awesome. Good job, guys. Okay, so we're going to draw the fib. Now the fib's already drawn in this case. So I'm not going to redraw it just because everything's already here. But when you draw the fib and you're clicking on your boss candle, if it's a buy, your first click is going to be at the lowest point of the candle, including the wick. And then your second click is going to be at the highest point of the candle, including the wick. And then your third click is back down to the lowest point of the candle, again, including the wick. So it's going to be 3 clicks to draw your fib from bottom to top to bottom. And then that's going to give you the lines that you see here marked out with these 4 different TP values. Okay, so that's what the fib extension gives us. Now, in this case, when we drew our trend-based fib extension, was there any resistance in the way of us hitting our TPs?
Yeah, we had the aqua there.
Yeah, so this was a little bit dicey right here because this boss candle here, it would have been nicer if it closed above the aqua, but it didn't. It closed just below it, making it possible that price would reject off of the aqua, which it did. So you can see that on the next candle, it did reject a little bit off of the aqua. So for a few minutes here on this trade, you would have been a little bit in drawdown, not very much. This candle here is about 13 points. So not majorly in drawdown, but there was a little period of time in this trade that you would have been in a little bit of drawdown. What we often see, or what we like to see, is that our trades actually like push up into profit pretty directly, but this one did endure a little bit of drawdown here. Nothing major though. Okay, so like it didn't come anywhere close to hitting our stop loss is what I mean by nothing major. right? Pretty far from the stop loss still, but a little bit of a pullback nonetheless. So it would have been a little nicer for us in this setup if this candle, the boss candle, would have actually closed over the aqua. That would have been a bit nicer. Okay, so anyways, so you have your boss candle, you've drawn your fib extension on it, you have your different TP levels, and you have your entry level. What else do you need? Perfect, right, stop loss. So what do we use to set our stop loss for a boss candle trade? Perfect, Aaron, fractal. So we open our indicators and we turn on our fractal indicator. This is the only time I turn it on, is just when I'm setting the stop loss, and then I turn it back off. And we're looking for the most recent lowest fractal low, which is quite a tongue twister. But what I mean is when you look to the left, I want you to find the most recent fractal low, but then I also want you to use your brain a little bit. And if you see another fractal low, maybe a little bit further back, that's a little bit lower, I want you to use the lowest of them. Okay, and then I also want you to think about all the things that you know about, say, like EMAs. Like, let's just say that this candle here was the lowest fractal low. I would still prefer, even with this being the lowest fractal low, I would still want your stop loss to be at least below the gray EMA. But in this case, because these guys are so close together, I would want it below the dark blue. So try not to be, this is kind of going to be a funny sentence because most of the time I say to trade like a robot, but when you're setting up your trades, I don't want you to think like a robot. Okay, like use the knowledge that you have. You know that the EMAs are really strong points of resistance. So put your stop loss under them so that you have those EMAs there as a layer of protection to help keep price pushed up away from your stop loss. Okay, so in this case here, we would use this fractal low here. And then once we find the fractal low, we need to look at the spread on your broker for US30, and then you want to multiply it by 2. So if your spread is 1.5, you're going to go 1.5 times 2, which is 3, and you want to put your stop loss 3 points below the lowest point of this candle. So in this case, the lowest point of this candle was 34,688. If we subtract 3, it'll be 34,685. Now, is this the stop loss that you enter into your own phone, into your trading app?
No, the number on your screen is a different brokerage, and each brokerage is different as far as where their point value is. With Fusion, with mine at one point, it was 14 spread difference.
Perfect, right? You need to adjust based on the difference between the price of the broker that you're looking at and the broker that you trade with. Darren, are you trading with Currency.com? Like, is Currency.com your broker? Okay, you're looking at the Global Prime screen, and Global Prime's pricing is currently, oh, you're using Global Prime and you're watching Global Prime. Perfect, yeah. So if you're actually looking at your broker's chart, then you actually get to use the exact numbers. So that's the benefit of using Global Prime. Okay, so so now you have your stop loss, you have your entry price, and you have your 4 different take profits. Now what I'm going to do is I'm going to rewind this trade, and we're going to reset it at our entry candle here, and we're going to watch it play back slowly, like not as slow as watching the market in real time, but slowly so that we can chat about it as it's playing out here. Okay, so you're watching the market, and here it paints you your bullish engulfing candle. So that was your entry. Now the next candle there, it did push down and was in drawdown a little bit, but you would have been okay. There was no reason to close yet. It was okay. If it would have continued to push lower, you would have started to look at closing the trade to minimize your loss there, but it didn't get too bad. And we sort of knew that it was possible for there to be a rejection off of the aqua. So because it didn't close over it. Now this next candle here was a huge candle, 59 points, and it ended up being bullish engulfing again. Now this candle is a really, really big bullish engulfing candle. It's like you wouldn't want to enter way up here, but we can see that the next candle actually did give a really big pullback. So if you seen this and you've seen it pull back, you could have potentially gotten an entry there. But this candle here, we can see that it spiked up high enough to get up and hit our TP3. And if you had a trailing stop loss, like if you, as this was going up, if you were trailing your stop loss on the next candle when price dropped off, you would have got taken out in profit, right? This definitely pulled back enough that it would have, whatever you were trailing by 10, 15, 20, 30, any trailing stop loss that you had in would have got hit on this candle. If you didn't have a trailing stop loss, you would have seen your trade be at TP3 and then pull back to TP1, which is also fine. You don't have to trail your stop loss if you don't want to. You can give your trades more room to breathe if that's what you prefer. It just depends on what type of trader you prefer to be. Everyone's going to be a little bit different with what they decide to do with that. So most likely, most people on my call probably are using trailing stops of some kind. Either you have a trailing stop loss moved up to entry because it was up in profit so much, or you were trailing. So I would say that most people were probably taken out on this candle. But if you weren't, it does end up continuing to push up here. So like this wick here on that candle got very close to hitting TP4. And then this candle here did hit TP4. It was quite volatile the whole way. So every one of these candles has a pretty decent wick on it, where if you were trailing your stop loss, you may not have got up to TP4 just because it was such a volatile climb. It wasn't just a straight easy climb. So this can be a little bit of an example of how sometimes your trade still does what you want it to do. And if you're trailing too closely, you get taken out of the trade and you don't have the opportunity to sort of maximize your profits as much. So when it comes to trailing, you can trail tightly if you want all the time, but you sometimes have to adjust your trailing to the volatility of the market. So like this wick here was 15 points. This wick here was 13 points. This wick here was 16 points. So just in general, like if you can see that the market has more volume or more volatility than normal, you may want to trail a little bit more liberally to give yourself a little bit more room to stay in the trade. Another thing to consider is keeping your trailing stop loss below the red EMA, or if you want to be tighter, below the yellow EMA. But in this case, with the yellow, you would have got taken out almost every time. If you were trailing just below the yellow, it would have wicked you out most of the time. If you were staying below the red, it still would have wicked you out here for sure. But if you didn't have a trailing stop loss in yet, and you would have trailed under the red EMA for the rest of the trade, you would have stayed okay. So you want to do your own back testing, and you want to trade lots of frequent trading so that you can get familiar with what you want to do. And some people, you may just want to set your stop loss and set your TPs and just let the trade run and do its thing, and only exit if there's an actual, like if an actual exit happens to tell you to get out of the trade. So lots of different options. Does anyone have any questions?
I do have one actually here. So from the boss candle, from our entry point to approximately where we would probably get stopped out, and if we did tight trailing stop, how many points is that?
So we measure from the top of like from the entry price here, and let's say you were trailing by, if you were trailing by 10, you would have got wicked out about here. So it's about 36 points.
Okay, so that's almost half of our, actually pretty much half of our pip points for the day that we like to aim for. So
Exactly. Yeah.
that's awesome.
Yeah, that one little trade is almost half of what you needed for your daily goal, if your daily goal was around 75 points. It doesn't take that many trades. That's why, like when we talk a lot about over trading and stuff. It's like lots of new people have way too many trades. Like if I maybe have 10 trades per week, I'll see people that have like 40 trades per week. There's very often like people during my call, BJ, that that have like 40 trades during my call when I only called like 1 or 2. So at some point you'll want to dial back the over trading and try to pick trades that that you like the best, really good trades, and yeah, try to let them play out a little bit more. Sorry, BJ, I didn't mean to pick on you. Okay, Yasmin has a question here. When I'm looking at my MT4 chart, sometimes it's the same price and sometimes it's a few points out. So how do I work it out when I do stop loss take profit when the price is sometimes the same and sometimes? Yeah, so you just gotta like keep checking every 5 minutes or so and just see if the price is still the same or not the same. If it's that close that it's only a few points out, it's not as big of a deal, but sometimes it's like out by like 40 points, or I mean, on one of my current brokers that I'm using, it's out by like 100 points. It's ridiculous. So if it's just a few points and sometimes it's the same and sometimes it's a little bit different, you should be okay. It's just like if it gets to be, more than, I don't know, it's hard to, more than 5 points, 10 points, then you want to be more aware of it. Yeah, so like if you would have held this trade and if you weren't trailing and you just were letting it run, or you were trailing with more space, like more liberally trailing, this now has pushed up about it's about 60 points right now. So that's why I don't typically actually set a TP in my phone, because I don't want to get taken out if it's going to continue to push up higher if I'm watching it. If I'm not watching the trade, then I just set the TP so that it hits it if I'm not going to be actively watching it. But if I'm still watching the trade, I don't actually set the TP in my phone, because if it keeps pushing higher than it, I want to like just let it keep riding. If we exit replay mode, we'll see that this thing has shot up like a rocket. I mean, at this point, I have to zoom out to even be able to see. So currently, it is now up 160 points. It never closed below the red EMA until this candle here at 809. So if you were trailing and keeping your trailing stop loss below the red EMA, you would have got to stay in this trade all the way up here. And also, this is the first time that there was the VBC, or sorry, the LC exit could happen right now. So there hasn't even been an LC exit yet on this trade. And there never was a VBC exit. Why? Who can tell me why there was never a VBC exit?
Candle didn't close.
Yeah, so it's because it never, the green line or price never went outside of the blue band. So it never made a shark fin. So because green never went outside of blue, there was no time that green crossed back over the blue to give you a VBC exit because it didn't make it outside the bands. If you're not watching the trade, how would you know what TP to set by backtesting and seeing what TP at regular hits previously? Yes, that's a very good way to know, is to do lots of backtesting so that you know statistically what TP gets hit the most often on that pair on that time frame. Or you could also look at some, like in this case here, if I wasn't going to be watching the trade, I probably wouldn't have left it at TP4. Just in case it didn't quite get back up there again, I probably would have used TP3. I mean, these wicks are actually they're right at the TP4 line or 2 points above it, and this one's right at it. But just if you weren't going to be watching the trade and you want to make sure it hits your TP, I would have used TP3 in this case. But yeah, you sort of just get used to it. You have to do some back testing, look at the previous structure. If there was an EMA here, you'd want to make sure that your TP was not higher than that EMA. So yeah, a bunch of different options there. But this thing ended up playing out very nicely, but we didn't know that this was going to happen. And with the bank holiday today, like there was potential that price could have just got stuck in between these EMAs and just like consolidated all day. So you want to be selective and try to give yourself the best chances to win. And for me, one of those things is not trading when the US banks and stuff are closed. This still obviously ended up playing out very well, but it doesn't mean that you have to trade every move that played out very well. There's always moves playing out. Let me know if anyone has any other questions about this specific trade setup here before I cut the recording for this little segment here. Okay, awesome. Well, oh, go ahead.
That's good. So the only thing I can see is, again, that major pullback on that red candle, right? How, again, it's like a 50-50 chance, like I could go this way or that way. And the biggest thing I can see that is going to play on everybody is psychology, like your mindset, like what do I do here? And the thing I always tell myself, a good trade is a good trade, no matter what it is. Yeah, there's lots of points we might have missed going up after that. However, again, that's why I asked 36 points is still in my books a huge win. And again, a journey begins with one step at a time.
Yeah, totally. This is a great trade. Like 36 points on US30 is awesome. This trade only took 2 minutes. It took 2 minutes to get 36 points if you would have just gotten out at TP3 because you had a trailing stop loss in. And then if you get taken out, normally there's normally another re-entry. Now in this case here, this candle closed at 749 and this opened at 748. So there was no gap up here, unfortunately. So this is not a bullish Harami. This candle here at 740 does end up being a boss candle. So there was a new entry here. at 8.8. Okay, this was a new entry because this candle ended up being a boss candle. You would need to check the TDI to make sure. So yeah, the TDI was okay. Lots of space up still. You probably would have also had the 5-minute open, so you would have been able to see the 5-minute as well to see how much space you had on there. But yeah, so anyways, if you got taken out of the first trade and then you waited a couple candles, there was a new entry right here. And the new entry had much less volatile pullbacks. There was a little bit of a pullback here. If you were keeping your trailing stop loss below the red, you would have stayed okay. If you weren't, you probably would have got taken out there if you were trailing by 10. So the whole thing is that trailing by 10 is not always the number that you want to use either. You do want to consider like how volatile the market is or how big the candles are and stuff like that as well, to determine how much to trail by, which I know it makes things very complicated. I wish it could just be black and white and just be the same every day, but that's just not the case. But if you would have taken the master candle as well, the first exit on the master candle doesn't happen until here, this KC exit candle. So that would have been another 90 points there. If you were trailing, you probably would have got taken out on some of these larger red candles up here. There was some that were probably big enough to have wicked you out closer to the top, which is great because you wouldn't have given up all the points back down to the KC exit. You may have got wicked out a little bit higher in profit than where the KC exit was. Nice job, Corey. 120 points. Awesome. All right, I am going to stop this recording now. So thank you for being on this call and for participating, and we'll catch you on the pip side.